What up, Tycoons? Super excited for today's video. Going to give you a quick market update and show you guys what we've been watching on the futures, how we were able to trade the Fed minutes properly yesterday. There were four very easy signals and trades, three to the downside, one to the upside. We're going to go ahead and cover those, give an update on the VIX, the volatility index. But before we do, let's go ahead and start right here and take a look. All right, the target rate probabilities, we're still at an 84% chance that it's going to be about a 75-point basis rate hike. All right, so not much has changed. We're going to see if this number goes up when CPI comes out in about 1 hour. You can expect that to be more bearish, right? More bearish sentiment, and you can expect to see a lot of things drop, especially if the CPI comes in hot. Now, if things come in lower, you may see this number drop down to 81% or even lower, and we could potentially get a rally, all right? There's a few things on the chart suggesting that we're due for a rally, and we may get that today, or we may see a bloodbath, all depending, right? So we're going to trade it in the Discord, up or down. We're going to be able to make some money. But the Fed minutes came out yesterday, and also the PPI data, but there was really not much price action until the very end. We did fall, but we did not break the previous low from Tuesday. All right, so that was really key and important. They're expecting higher rates to stay in place via the meeting minutes. All right, we're looking at some headlines right here. Fed officials commit to restrictive rates, but collaboration is needed. We're going to go ahead and jump into the charts now, okay? And this was yesterday's price action, all right? And I'll go ahead and zoom in, and we're looking at the futures, all right, the S&P 500 futures. And you have to respect the wedge, folks, all right? There's lots of wedge patterns in my videos. We have this rising wedge right here. As soon as we got the break of that, that was a nice clean move right there, okay? And we're trading, me particular, I'm trading SPY option contracts with 0 days to expiration, or like 2 to 3 days to expiration. So if you're able to catch this move from here all the way down, that's a very nice profit. Those are really nice trades, right? And then we come here and we see that we're finding support at our support level here. Go ahead and close that position, and then we formed a nice symmetrical triangle pattern, right? We have this nice triangle pattern right here. We got a clean break to the upside. We were in some call options, pull back, and we held the level very well. Okay, so this is a breakout, retest, move to the upside, and look at where the move finishes. It finished right up here. So, we took some profit on the call options here once we got the target for the breakout. And in that, and ended up setting up a head and shoulders, right? I don't know if you were able to see. I didn't trade the head and shoulders necessarily. I traded this smaller wedge pattern, right? So we see another wedge come up here. We break through the level and we get a nice sharp move to the downside. And we're really holding this support level all day. We broke through and hit our demand zone. And the one time, as soon as we touched that demand zone, we went up. And that was a very sharp move to the upside. And then, CPI came out right here. This is the 2 o'clock candle. And we see that, it didn't really cause a sell-off in the market. There was a lot of things going on. People had to digest the information. And eventually, we did break through another wedge pattern with a nice move to the downside. And then this ultimately created a bear flag, which, I should have traded. But I ended up not, just because, I already taken so many trades in the day. But nice bear flag here to ultimately get us to move back down. But futures are going back up, all right? They're recovering, and we're really going to see, what's going to happen here in about 1 hour. But look at where we are, okay? We're back above our main support level, and we're just trading in this range, right? We've really been trading in between this demand zone and this supply zone to the top. And we're going to wait and see what is the next move, and then we're going to look for the intraday patterns that we can trade it off of. All right. Each time CPI has come out, there's been an over 1% move in the market. This is great for traders. Okay, these 1% plus days, we might drop 3%, we might rally 3% today. So that's really good for traders. It's going to give you the volatility that you need to be able to get in and out of positions and still make some nice profits. All right. We'll go ahead and take a look at the SPY real quick. All right. The S&P 500 index, and we'll go ahead and maximize this. All right. And we have the person's pivot levels on here. All right. So What I'm really going to be watching today is, I'm going to be using these red lines here as our main support and resistance levels, right? And I'm going to see, what we're going to do. Really, we're just consolidating underneath this one. If we are able to get above this one, we could come up to here. All right, 362 roughly would be the area. We also have a weekly person pivot level right at this area as well. So, look for 362 to be a major resistance. If we do get, a bullish CPI print and go to the upside and we break past 362, we could come all the way up here. And what level is that? Right around 367. So, like I said, there's big moves that happen on CPI. All right. A 2% move to the upside will take us up to 367. All right. And a 2.5% move will take us down to 350 on SPY. All right. So that's really what we need to pay attention to. And then look, what I like to do is I like to trade level to level, right? So I'm not looking to, hopefully catch it here. And then if we hit this level and go up higher, I'm taking profit level to level. So I'm looking to see, all right, well, we came up, hit our first level. I'm going to take some profit and look to see if we can flip that level from resistance to support and move to the upside. Then I'll trade from this level up to the next level. And if we break below here, which is roughly 357, then I'm going to be looking to short it down to this level first, okay, which is going to be right at 354. Then I have another level down here at roughly 352. And ultimately, like I said, if we get those 2 or 3% moves to the upside or downside, I'll be looking at 350 for today on SPY to the short side, and 357 up here, or I'm sorry, 367 up here to the upside in case we get a bullish CPI print. Now, one of the reasons that people think that we actually could go bullish here is because of the VIX. All right, if we look at the VIX, there's a couple things that I really want to highlight. And one of them is going to be this gap down. All right. These gaps are very profitable. There was a nice gap down here that we had to fill. And, we came up into this small supply zone earlier in the week. And then we filled that gap that was very juicy for call options or for stocks if you're trading them to the upside, right? If the VIX drops, then stocks are going to go higher. What we're seeing is it looks a little bit like a bull flag, right? So the VIX is very bullish, really consolidating between 31 and 34, but there's another big gap down to fill, right? So on top of that big gap down, we have bearish divergence on our relative strength index. Okay, it's going to show you the relative strength of something at its current price levels. So what it's done is it's gone higher. It's made a high and a higher high, but what we've done on the relative strength index is make a high and a lower high. So if we're able to break through the bearish divergence trend line, you can expect to see lots of pain in the market. But if this bearish divergence trend line plays out, the VIX could drop all the way down to 31.5 to fill that gap, and that's going to make stocks go up. If we look at the DMI, this tracks who's in control, right? Green is the buyers, yet red is the sellers, and blue is the average. We can see that it's starting to average out. The sellers are slowly creeping up, right? But buyers ultimately are still in control, right? So we're going to see if sellers can really get the push up on the VIX and drop it down, or if buyers are just going to reclaim control and send the market crashing down. All right, CPI is going to be the big catalyst. So again, make sure to wait for CPI and look at how the market's reacting to it. If the market's reacting really bad, don't try to throw all your money on call options. And if we're reacting well, let the price action do the talking. Okay, don't trade what you think the stock needs to do, because the stock market doesn't do what it needs you to do. It does the opposite, right? Try to think of market makers want to make as much money as possible. How can they trick retail? How can they trick us and maybe stop us out of our positions just for it to reverse? Okay, so that's it for today's video. If you made it this far, smash the like button. Don't forget to subscribe, and I'm out.